One of today's floor show guests says he has a brand new ETF and he says it's ready to outperform the S&P 500. Yeah, so a gain of about 20% as we see for the S&P. But let's look at this. It's the Revere Sector Opportunity ETF. It began trading this morning under the ticker RSPY. Let's call it flat to slightly lower at the moment. What it's going to do is it will revolve around all 11 S&P sectors. But what else? How will it top the amazing 2021 run that we have already seen? Let's find out from the man himself. We welcome Revere Securities Scott Fullman and Slate Stone Wealth Chief Market Strategist and Trader Kenny Polcari. All right, you've got to get right to it here. We are dying to know about this ETF and what makes it different. What kind of exposure does it give you that's somehow different from the basic S&P index or the spider that tracks the S&P?
Well, Liz, first of all, it's an exciting day here at Revere, bringing out our ETF. And basically what we're doing, we're looking for the outperforming sectors to weight them higher than the other sectors and look for that performance in the weightings by turning around and weighting on those sectors that we find technically and from a macro standpoint stronger than the other sectors. We believe that we can outperform the S&P 500.
Scott, I understand that. I get that by design, you are going to accentuate certain individual stocks, even though as you look at the top holdings, it's basically, I mean, do I call it a fund of funds, an ETF of ETFs? You've got Spider Technology, S&P Communication Services, Healthcare, Financials, and Industrials. And let's just talk about this because Kenny pointed this out. You know, look, if you have the XLC, you're going to get particular exposure to Facebook and Google. For the XLK, Apple and Microsoft. For XLF, Berkshire Hathaway. I know Kenny has a question about this one. Go for it, Kenny. There's one area that's missing.
So, Scott, I got a couple of things to do. First of all, congratulations on this. I hope you're successful with it. But why wouldn't you think about, why wouldn't you think about energy in there, considering I think energy next year, if we go into this infrastructure plan, energy and financials will certainly be in areas that are going to be, that will benefit from that. So shouldn't you, or is it fluid that you may add energy kind of mid-year or some other point?
So this is an actively managed fund. So we are going to be changing the weightings as we see changes in both the technicals and the macro outlook going around. Now we're in also, this time of year is generally the weakest point of the year for the market. We've been a little bit sensitive to that, so we've made the fund to start out a little bit more protective and defensive in here. But the fact is, we will be moving and changing the weightings as we go along, and that is going to help us to gain that outperformance.
Well, how soon are you going to add energy? Because crude oil, you know, to Kenny's point, crude oil's been on an incredible run. It's up another 3% today. It had a huge move yesterday. So, I mean, how much more time are you going to wait to see that you need to add energy?
So we're in energy back a few months ago. We came out of it about a month or so ago, and we'll probably wind up going back in sometime in the future, but not right just now. Again, we want to maintain a bit of defensive-ness in the fund because there is a lot of volatility at this time of year. We want to make sure that, you know, we're looking out for our investors' money as we move forward. And when you're starting something out, you don't want to just turn around and be very, very aggressive. You got to be a little bit cautious as well and keep things balanced.
We have some unforeseen things, Kenny, that we're dealing with. In fact, in the very, very near term, it's the Federal Reserve and its Jackson Hole event, which will be virtual, of course, due to the Delta variant and the COVID situation. But what are you expecting from Powell? I've heard both sides. He's got to talk about timing of the taper, or he ain't going to touch that with a 20-foot pole.
Well, listen, I think it's two things. I don't think he's necessarily going to say anything more than he's already said, right? We all heard it. He said it, that they've already started the conversation. The implication was that it's going to start later this year and it's going to end 10 months into 2022. That he made clear. Now, exactly when it's going to start, he's been very coy about that, and I don't think we're going to get any clarification on Friday when he speaks. I think he's going to continue to reiterate that we're there, but we're not there yet. And yes, we're talking about it, but we're not there yet. And maybe it's going to be the end of the year. I think that's what he's going to continue to toe that line. to try to keep the market, try to keep some stability in the market. Because like Scott just said, we're entering a very fairly volatile time of the year. And I think the last thing he wants to do at the moment is suddenly make this announcement that everyone expects. But if it's a little bit sooner than not, I think it's going to add to that volatility. So I think he's going to play it very low key.
Scott, I'm going to pull at Charlie Gasparino here and say the power of Fox Business. Your fund has just turned positive slightly. Perhaps people are watching it and into the story that you have. We'll call it flat to slightly higher for RS. By the way, the ticker once again is RSPY, the Revere Sector Opportunity ETF launching today. Good luck to you. And Kenny, always great to see you. Thank you so much.
Thank you.
Thank you, Liz.